Welcome back, YouTube. Today we are talking about different order types, specifically the market order, the limit order, the good till cancel order, short GTC, and the stop loss order. Let's give you a brief overview of what these four order types are. Mind you, there are more order types, but these are the most common ones. Market orders usually guarantee an immediate fill, but not the filled price. What will be more advantageous for you is to use a limit order which guarantees a fill at a certain price or better. Then there are GTC orders, which are good till cancelled orders, which are essentially limit orders that stay active until they are cancelled or until your broker cancels them. That's usually 3 to 6 weeks. Then we have the stop loss order. Stop loss orders are used to immediately execute a trade when a stock or option trades at a specific price. In this example, we are looking at the likely fill prices for your market order. So here the ask price is $79, the mid price is $79.50, and the bid price is $80. Now, we play through this with a buy order and a sell order. If you were routing a market buy order, it is likely that you get filled at or near the asking price of $79. If you are routing a sell order, you are likely to get filled at the bid price of $80. There's very low likelihood that you will get filled at the mid price, which might be most advantageous for you. Limit buy order. Let's say the current price of the stock is $79, but you want to buy the stock when it reached $75. So when the stock traces back a bit, you want to then buy the dip. And for that, you would place a limit buy order at $75, and then once the stock reaches the $75, it will get filled. So this guarantees you a price of $75 or lower. Now the next example is the limit sell order. Let's say the current price of a stock is $80 and you want to take profit at $85. So for that you would route a limit sell order, and this limit order will guarantee that you get a fill at $85 or better. Now the next one is a stop loss sell order. What is the stop loss sell order? Let's say the initial price of a stock is $79. Now, you want to protect yourself from falling stock price. You determine at $75 you want to get rid of this stock. For that, you would route a stop loss order at $75. This order will automatically be filled once the stock falls to $75 or lower. Now we can do the same with the stop loss buy order, which protects you in case you were short a stock and now the stock is retracing. Let's say the initial price is $75, now it's retracing to $79, or you want to get out at $79. Stop loss buy order gives you an automatic fill at $79 or better. One more stop loss type is a trailing stop loss, which you could usually set as a definite amount of the stock price or as a percentage of the stock price. This will then climb with the stock. To summarize, we were talking about the market order, limit order, GTC order, and stop loss order. Market orders guarantee immediate fill but not fill price and are therefore unfavorable for the seller. Limit orders guarantee to fill the price or better and are therefore favorized. Good till cancel orders remain active until cancelled or the broker's maximum allowable duration. Stop loss orders execute market orders when the stock or option prices reach a certain price. Don't forget to like and subscribe.